Hi friends, my name is Bharath Chandra. The continuous fall in markets since last 3 months has now resulted in fall in the overall market breadth. Majority of the stocks are now trading below the long-term moving average. The 200 days simple moving average is said to be the long-term moving average, and stocks trading above the same are said to be holding a positive or bullish movement and vice versa. So if it's above the 200 days moving average, usually it is a bullish trend, otherwise it's a bearish trend. As of Friday, around 316 stocks or 63% of the Nifty 500 stocks were trading below their long-term moving average, which is the 200 days moving average. Similarly, large cap stocks, specifically Nifty 50 stocks, 31 out of the 50 stocks are trading below the 200 days moving average. Percentage of stocks below 200 days moving average, Nifty 50 out of 50 stocks, 31 stocks are below 200 days moving average. That means 62% of the stocks are below the moving average. Nifty mid cap 150 stocks are there in the index. Out of that, 95 stocks are below 200 days moving average. That means 63% below 200 days moving average. Nifty small cap 250 index, in this there are 250 stocks, and in that 144 stocks are trading below the 200 days moving average. That means 58% of the total stocks in this index are below the moving average. As per technical analysts, the Nifty has a crucial support around 23,500, 23,450 levels. A sustained breakdown below the mentioned levels could drive prices lower towards 23,200 or even 23,000. On the other hand, the immediate resistance lies at around 23,700, 23,750 and later at 23,900 to around 24,000 level. Nifty's 200 DMA is currently at 23,940, whereas Nifty is trading at 23,432. Analysts are concerned about many challenges for markets in the coming months, such as number 1, implementation of US tariffs on various countries because Donald Trump is going to take over as a president in the next few days. Second, continuous strengthening of the US dollar. Indian rupee has fallen to 86 rupees per US dollar and is likely to depreciate further. 3. Weakness in Chinese economy. 4. Slowdown in the Indian economy because July to September GDP was very weak. We have to see October to December quarter how the performance is, and if that is also weak, then markets could fall further. 5. Continuous FII selling. And 6. Uncertainty over budget and whether new announcements with respect to taxation will be announced by the finance minister in this budget. Foreign institutional investors have been aggressive sellers in Indian shares for the last 4 months. As per data available from NSE, FIIs have net sold stocks to the tune of Rs 19,103 crores so far in January. Over the last 4 months, starting October 2024, they have sold shares worth 1.97 lakh crores. The quarterly results will be majorly announced from the coming week, where markets will react significantly to the results since it will indicate the state of the Indian economy. Analysts are expecting a small short-term rally sometime due to the oversold position in the markets as of now. However, on an overall basis, the markets are likely to stay weak for some more months because of so many concerns in the international markets as well as in the local markets. If you like this video, please click the like button and mention in the comment section, do you think the government may make massive changes to taxes in this budget? If you feel yes, type yes, otherwise type no. Personally, I don't think there will be any massive changes because already lot of announcements were made in July 2024 after the new government was formed. Thank you for watching this video. Bye bye and all the best.